So there are a few different types of entries that we're going to be making. And really this is going to be on the accrual method of accounting. So when it comes to the accrual versus cash method, the accrual method tries to record revenues and expenses as they are earned, where cash says, here's when we actually got paid, when we received the cash. So, so when it comes to adjusting entries in the accrual method, that's where we're going to see some of these prepaid items, the unearned items, and these accrued expenses and revenues. So the prepaid items are going to be a lot of times we see prepaid insurance or prepaid rent, and so that's you're paying up front those expenses, whether it's insurance or rent or whatever it is. So we'll make an adjustment to either book the prepaid. Here's what we've paid and we currently have it in our expense account, but really we only utilized half of what we paid, and so we need to book that to the prepaid account and reduce our expense because we actually utilized less of that expense. Or there's unearned items that are going to be the exact opposite. When a customer pays us in advance, well, we haven't earned that revenue yet. We have the cash, but we just haven't earned it yet. So let's say one of our customers says, hey, I'm going to be out of town. I want you to watch my dog. So I'm just going to pay you up front. And so that way I don't have to worry about it later. You're covered. You come watch my dog. When I get back, we're square. So that's money that when we receive it, we haven't earned it yet. We're just holding it until we earn it. So that's going to be one of those unearned items. And then accrued expenses are going to be expenses that we incurred, but we haven't paid it yet. So think of our accounts receivable, or I'm sorry, our accounts payable, where we have the expense, we made this purchase, but we haven't paid for it yet. And so that's going to be an accounts payable. So that's going to be an accrued expense. And then the accrued revenues is going to be our accounts receivable, revenues that we've earned, but we haven't collected the cash for yet. We've done the service, but we received a promise that we're going to be paid later on. So that's going to be the four big types of journal entries that are going to be made. And we'll look at each of these individually here in a minute. And that's really the difference between cash and accrual, where accrual matches the revenues and the expenses when they are incurred, whereas cash recognizes those that when we either pay the expense or we receive the cash and get paid. So that's going to be the difference between cash and accrual. And a lot of times our entries are going to affect both a balance sheet account and a profit and loss account. And so you can see this little chart here where sometimes it'll be the asset and revenue or asset and expense, or the liabilities are going to be revenues and liabilities, or the expense and the liabilities. So really in our adjusting entries, we're going to be, for the most part, affecting both the balance sheet and the profit and loss. So here in a minute, we're going to dive into each one of these types of adjusting entries.